right. Um, since we're at it now, might as well make a video on the subject. So, I'm gonna break down my trade from today. You can check the execution on my journal if you want. I already tagged you about it in the post above. So sorry if I tagged you twice. I know it's a bit annoying, but um, if you want to learn a bit, then stick around. Um, Today was fairly difficult. There were some people in the live that we talked about. Past few month has been difficult to trade. We've been in a range. So, like I said, there's SMT up here and SMT down here. We're in a weird range right now. We don't know what to do. We're just consolidating. There's a lot of problems around the world right now. So it's not looking too good, but usually, and I don't want to sound like I'm certain of it, but usually they don't have any balls to start an actual war. So peace talks will get released, and then everything will be green again, and everyone will be back happy and buying Nasdaq. No, um, I'm gonna be honest. Today was difficult. I was expecting us to break out of the range, but at the same time, I was also expecting us to retrace. Now, I adapted fast to my situation today, and I'm gonna break it down from the very beginning. How I got my entries, how I got my bias, this and that, blah 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 blah, whatever the fuck, right? So let's start with this. Um, we're stuck between market maker models right now. So number one, um, this model right here. So if you watched my market maker model videos, or video that's in this server, you'll know that everything is connected with time frame alignment. So this is a 4-hour connection based on a weekly. I'm pretty sure. I'm pretty sure. I'm not being stupid by saying that it's a 4-hour time frame based on a weekly. Yeah. All right. So usually when we deliver and we touch -1, we retrace back to discount. That's exactly what we did here. But this SMT is, you see, back into discount and well, but this SMT held this up, and as you can see from this 4-hour wick, didn't quite touch the CE of it, but it did react to some PD rays. So even though this delivery wasn't as clean as most of you would like, it's still valid. So from there, I just do what I see when the market reacts off of this. I use time frame alignment to get my standard deviation again so that I can get some sort of direction. So, same process. We connect from low to high of the last swing and we get a measurement for where price might go. And my debunking of this is very simple. I get first stage distribution or the first delivery, and then I'm expecting first stage accumulation, which is just this that you can see right here. It's not going to be as clean as you see in the examples that you see in charts, something like this, right? Where people just mark out this, and this is market maker model. So you should just look for a pattern. It doesn't work like that. You have to work your ways around it with a measurement tool. So yeah, for me, my logic is -1 hit, I'll get the first stage accumulation. Accumulations work like this. We either accumulate and just go when we break out of this accumulation zone, or we'll see a visible time frame aligned power of 3. That will work like this. Goes back into discount, mitigates this area that's imbalanced, and then runs and forms a new range that works like this again, and could or not mitigate this area right here, depending on how price wants to deliver. We never know what it's going to do. We never know when it's going to reverse. We never know nothing of that. If anyone tells you they know where market will reverse for certain, they either have a very good strategy, which they shouldn't be sharing with you, or um, they're just gambling. So even though I have these levels and I know that we're probably going to get reactions, I never know for certain. So what I do is I wait for confirmation. So let's say I wanted to long here. This is all gonna come down into this. So if you want to skip to the end of the video, I'll probably break down this, but I'm still gonna take a while to get there. All comes down to this confirmation with my close of the low risk buy of the smart money reversal, or SMR, whatever you want to call it, which is just a close above the breaker. Now, usually it really depends on how price wants to behave with the breaker, but this is a point that when it gets touched, if you have like a, I mean, not all of you are probably fond of ICT, but if you have a breakaway gap, usually, and if it doesn't get touched, there might be a chance to get revisited. Um, but if this is mitigated to the tick, usually means that this range, it all depends on the range. Is probably mitigated, but you can do this that I'm about to show you, which is just using C of the range. See, connecting C of the range, like we have here. Sorry, and then that gets mitigated, so we don't have any interest anymore. Why don't we have any interest in this anymore? Because one, what do you call EL, or low resistance liquidity, was swept. We got the breaker tap. So in market maker model, textbook uh, logic, we don't need to come back to this. So this range is gone. Clear invalidation point for longs. After this, since this was the accumulation stage, I get a distribution phase up again. Now, this is where market maker models start to become a bit more tricky. And this is why you'll see several legs inside of a market maker model that accumulate, 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 right? You're going to see lots of market maker models inside of market maker models, okay? Sounds a bit complicated, yes, but it's really not. It's the same logic over and over. In this case, we used I'm pretty much sure it was the hourly PDRA. As you can see, we held the hourly FEG. So we come into this, connect the 5 minute leg. I'm not sure there was a 4 hour. Well, you could call it a 4 hour order block, but either the 5 or the 15 minute makes sense. But for you to get an actual connection, you need to have something that makes it make sense. You can't connect random legs that suit targets like this or this. You see, you can't do this. This is stupid. Okay? I mean, it's my view. If anyone else has a different view, I respect it. But I fully believe that you are a retard. Okay? When it comes to this. Why? Because I've tested hours and hours and hours of delivery. I've tried to connect everything like you do when you see a clean leg that goes into a PDRA and you just pull it out, and then because it looks clean, and that's the reasoning. And some motherfucker will start talking about discretion when this is purely mechanical the way you connect this. So um sorry, for me that doesn't work. uh Again, let's keep the logic of this. So -1 accumulation stage, we go into another PDRA, we get another micro model, I mean, we get the first micro model off of this, whatever you want to call it, because there was another one right here. But same logic. You wait for -1 to get hit. You wait for a reaction. If there's no reaction, then we're probably gonna go for -2. So we climb up to -2, and then what do we get? What do we get? We get our retracement, but we never see anything about discount. So this gets left behind, even though it delivers, gets left behind, completes this tiny model. Not the best way possible, but it completes it. So yeah, that is what it is. Didn't find any entries there, which is fine. Based off that standard deviation, didn't find anything. But now I have some quite some logic that leads me to believe where price will go. Let me just show you something. If we start closing above this standard deviation levels are not limit here, limit here, limit here. This is a zone. And this might seem little, but this zone is 50 points. So if you were to limit -2, you can still be bearish if the reversal was here, so let's say, right? To price, you're still susceptible to price hanging around this area until it reverses. So the using standard deviation as a way to limit understanding becomes a bit stupid, right? Because you're just playing zones. It's the same as OTE or whatever. But if the OTE is too big for you to take it, then why would you? Why would you place a 10-point stop when a standard deviation range is 50 points? Okay, moving on. You see that we look for closures above zones. If -2 gets invalidated, that means there is a high chance that -4 gets hit. How do I pair probability into this even further? My take on this is overall direction of market. So I go, okay, monkey, look at chart higher time frame. Monkey, think, what is higher time frame direction? Are we making lower lows or higher lows? Whatever, right? All it matters is what your higher time frame bias is. So if I'm bullish and I start seeing closes above 2.5, I can expect a retracement somewhere around here after we close to reach -4. This is exactly what we do here. This is exactly what we're doing here as well. So I'm going to delete this so you don't get distracted. And I'm going to show you, someone's calling me. I'm going to show you exactly what this is by telling you how I was bullish today, basically. So we're going to the day, right? We closed pretty bullish above NWOG, blah, 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 right? All that bullshit. We get a micro model inside Asia that makes a standard deviation. Now, this alignment was pretty hard to get, but still valid. Okay, it's a 5-minute leg off a 1 hour gap. Look, 5-minute gap off a 1 hour gap. See, not difficult to understand, right, guys? 5-minute leg off a 1 hour gap. Pretty sure it's also 15-minute of a 4 hour. Usually, you want to go for the highest time frame possible. So this is a 15, sorry. You go for the 15-minute leg. You'll see, same thing happens. Delivery, -1. Accumulation. Let's see. Did this candle mitigate this? I'm just trying to get solid. Okay, so this candle mitigated EQ right there. This one as well. This one didn't. So this is EQ. We don't get mitigation of EQ right there. So we don't enter. There was a solid entry though. When we close this like this, we low-key mitigate EQ right there. I mean, we don't, we edge it, but you see the point? When this candle closes, it prints higher into the breaker and then starts delivering down to -1. After we get -1, we sweep up, accumulate, distribute to -2 to the tick. Now, this was a pretty solid range, but at the same time, this was London trading, which is only valid from 3 a.m. in my opinion. And 3 a.m. offered an open low into resweep, which was pretty fucking good, in my opinion. Then we get SMT here, and it gets all messy, right? But still, going into the day, what do we have here? We have -2 right there as a zone, and we also had I think this should be enough. No, 1 minute should be enough. We also had 8:30 news right here. Unemployment claims. Deliver higher. Deliver a open a high low. So a bearish candle. Sorry, pre-market was bearish. So pre-market bearish with 8:30 news is a cheat code, and it's going to be right above 50% of the times. So it's above 50% win rate. If you have solid context, of course. So what we have right here is a possible target for this. Now a lot of you are going to be confused, but ES hit this target, I'm pretty sure. I just have to switch it around and you'll see that it didn't hit it pre-market, I think, because it was pretty lame. Wait, what? Did I fuck up the connection? Well, it doesn't matter now. Yeah, okay, the SMT was right here, sorry. We didn't actually get to deliver here, and that was a problem, yeah, at the time. I wanted to see a bit lower before longing, and I bet that left a lot of people thinking we weren't gonna go. But standard deviation is not right always, you know? It's not uh it's not a concept that's gonna be right 100% of the time. So this ended up being irrelevant, but deviation of the 830 was the only one I could find since during London I didn't find any good standard deviations. Now, I based off my bullish standard deviation for this off this 1 hour gap, which we swept an internal low into, reacted again. I didn't have time to react since I was expecting New York Open to open higher instantly, but it was very, very fast. So only entries that were given were like either you got in with sell stops or buy stops, whatever you use, um, or you just market order of the initial move. Now this is the breakdown. If you wanna, uh, if you came for this, then yeah, you've arrived to the destination. Overall, we know that we close above 2.5. News printed lower, and we have this supporting price right here. We know that we are within a range, so we don't want to overextend our targets too much, especially with higher time frame SMTs, and especially since we're trading in a range, right? So what we want to do is, yes, we acknowledge that there is interest in going higher at the time at market open, and we extend the standard deviation we get from the PD area we get, and the targets we get are this. -1 gets raped again, or it gets touched inappropriately. But we start seeing on the 5 minute that we accumulate around the -2 zone. So, me, as a degenerate, I mean, just I'm kidding, but as a person with a bit more experience than you in this, because I've seen this print many, many times, I come back into this. I check where we go after -2. and we mitigate discount. Now, this would have been one of the best entries for me since we had the opportunity to actually test a breaker, I think, if I'm not mistaken, but on a weird time frame. So it wasn't really, you see, there was a breaker right here with a big ass gap. So for me, one of the best entries could have been just limiting this right here, you see? See where I told you that this usually just taps and goes? See right there? There's your option. We have to stay below the 5 minute to find our entries though, because you're trading time frame aligned market maker models. So from 5 down to 30, down to 5 seconds, it's valid. But most of you that will trade 30, 15, 5, 1, you're going to lose because you can't react fast enough. If you can't master 5, 3, even 1 minute, then seconds trading is not for you. So what happens is I miss my trade because I was live streaming, and at the time, I wasn't really paying attention fully to the seconds chart, so I ended up missing my trade, which is just fine. Uh, Also had a level right here at the time instead of this one right here at the time instead of the one that you were looking at. So I don't remember where it was, but you can put it back in the video. So I decided to take a high risk re-entry into this. So what I did was play my cards right, checked for ranges, knew that this range was already mitigated, so I played this new range right here. So range is right there, discount of the range right there. Let's just go for the breaker. Now, why would I go for the breaker since the swing low is so far behind already? Because I had conviction and another tiny level right here. So, and ended up entering longs right there with a stop that was around 16 or 15 points. I don't really remember. At a time, I really just react off of this connection of the close of this order block right here. So once we got this order block, I just instantly moved my stop right there. So, but the initial stop was around 13, 15 points, something like that. I think it was covering fucking OT of the range, something like that. Maybe 15 points, I don't know. And I ended up targeting -4, which was right there for 7R average risk to reward. It's less than I usually do, yes, but it's a lot still. And it impressed me how much I could do if I just started going for impressive trades and actually started trading to make money. It has improved my trading a lot, and you shouldn't be worrying too much about where you enter. It's difficult to realize that you are in a bad spot to trade most of the time, but when you have a good sense of direction, you have to take opportunity for that. And I just played what I had. Normal market maker model, every rule I explained beforehand, same delivery. That's about it.